Welcome. How's it going? Hey, it is I, TJ. It is another M5 successful friend. And if you've never been here, boom, how's it going? And if you've been here before, you know the drill. Welcome aboard. Well, today, like any other day, I've got a successful friend. And this guy here, we've been grinding together back in the days when I used to work. His focus is mainly here in South Africa. But when I was grinding in my 9 to 5, I was out there in Africa. So we're kind of like something having two things in common, property and the employer. But we're going to be speaking about Miguel Martins as Miguel. Who is he and what does he do? Miguel, good having you around and welcome aboard.
Hi TJ, good to connect with you.
Good. Who is Miguel? We have seen Miguel. For some of you that don't know you, you're one of those guys that I've seen who have been extremely passionate about property. Where there is property talks, you are there. And who is Miguel Martins?
Hey TJ. So I mean, just to kind of like take a bit of a history lesson and really lucky to be sharing this with you and kind of taking a bit of a side discussion, what we normally talk about, right?
Yeah.
So I was born in Hillbrow in Johannesburg. My parents originally came from Mozambique. Being Portuguese, they came to South Africa. My dad studied at Potch Boys, married my mom, brought her over, and settled in Joburg. I was born in Hillbrow, and I've been in Johannesburg ever since.
Do you know which part of Hillbrow though?
They lived there for some time. I don't know exactly which part of Hillbrow. I just know I was born at the Florence Nightingale Hospital, and we were there for a couple of years. Before moving to Bez Valley, another very interesting investment hotspot these days. And then eventually landing up in Legari in Randburg, and that's really where I grew up. I was there throughout my primary school. I went to Craighall Primary, then to Ferndale High School, and eventually Hyde Park High. So really, I'm a northern suburbs kid, but but I do come from centre of Joburg, so rough and tough.
I think you want to call yourself rough and tough. You're not rough.
No, I've lost that.
So Miguel, you've been in the you have literally. You're a Joburg boy, right? That's what you are. And married, kids?
Right. So married, 3 kids. Kids at the moment, they are 6, 8, and 10. So really, so young kids. My wife's an accountant. She works for another bank. And I think, we're a typical, I guess, professional family. We live in the northern suburbs. We're very fortunate. We have a good life. Being Portuguese, we have a big family, and a lot of our family is involved in different businesses. And at a birthday party or on Christmas Day, after lunch is done, we tend to sit around and everyone complains or talks about their businesses, and it's a great place to learn about business and pick up hints and ideas from other people. So very much in that kind of family vibe, South African Portuguese families.
So back in the days, Miguel, I stayed in Moz.
Okay.
I did. In the late 90s. Fascinating that you're saying that your family is from Moz. Do you know where? Have you been?
I have been. I've been several times. So my parents were born in Maputo. Okay. And we still have some extended family, 1 or 2 families living in Maputo. So, nice. So still have a lot of links there. Probably haven't been there in the last kind of 8 or 9 years. Just haven't got around to going there. But definitely a very, very nice place to visit. And I think even business-wise, there's some interesting things happening there.
It is. I mean, Mozambique, it's a growing economy. I mean, they came from war not so long ago. So, you know, they're throwing everything to the fence to stimulate their economy. So, I mean, those that have links there and you are ahead in terms of your thinking, it could be a great place to go in and help stimulate the market and also put some money on the table for yourself.
Yeah, absolutely. Even last year, I was chatting to someone who's involved in the home loans business in Mozambique, in Maputo, and we were talking to them about. I was talking to her about Airbnb, and she had never heard of Airbnb. And so their properties on a 99-year lease, you can't purchase it as such as you can in South Africa. It's on 99-year lease, and as a foreigner, very difficult to buy property in Mozambique. Not impossible, but difficult. But doing a rent-to-rent strategy, Airbnb, she never heard of it. But when I went on to Airbnb, lots of options in Maputo, but the fact that people in the property business haven't heard of it talks to the opportunities there still are for various strategies in that country. Yeah, absolutely. So it's great. So one thing I always try to do is I always try to keep myself up to date with how business is being done, especially property investment business has been done in other countries and other spaces. Because if you look at that, you can then reflect back on how you can probably think about those strategies in your own backyard, just to try and stay ahead of the curve.
100%. You're spot on. Me and you, we think alike, Miguel. That's exactly what I've been doing from the time I started. But how did you start, Miguel? How did you start being in property? Because I know that you're pretty active. We've bumped into each other in many places that they speak about property. Sabin being particularly one of those places. But how did you start?
Okay, great. So my father did a few house renovations when I was growing up. So I've always been around property and property as an investment type. But he really dabbled in it. So it wasn't anything prolific. But I guess there my interest was sparked. And then I guess growing up after I finished school and started varsity, I did distance learning through UNISA. I looked around and I said, well, you know, yes, I'm going to be working for a job and I'm going to get I wasn't quite sure I was going to get into the time, but I always saw property as definitely an alternative life strategy and investment strategy, and that thing that was going to take me to financial freedom. I came across this book when I was just starting work in about 97, 98.
Right.
And it's Nedbank's Making Money. And this book was published in 1990. I found it at a flea market. And really what it was, it's a book that talks about various financial strategies towards financial freedom and your financial life strategy, and various types of investments, savings, etc. And there's a particular chapter on property as investment, home loans, and that's when I first got really exposed to how to use a home loan to invest in property and to build a portfolio, etc. And soon after that, I found my other book, and I think everyone's seen this book. And this book is about 25 years old, and this is a book that I read over a couple of evenings, and that's really what kind of set my mind and got me thinking about property as investment. But the point I wanted to make about that first Nedbank book was that it was a South African book written by Magnus Haystack, who's still quite active as an investor. He was one of the authors. It was relevant to South Africa, relevant to the time, and it really got me thinking about it. My first investment was a 2-bedroom apartment I bought in Morningside in Sandton in 1998. I bought it for 220,000. I rented it out for about 18 months, and I sold it for 280,000 at the time. And I made a bit of money, and I thought, oh, that was fantastic. And I think that really got me going. And I thought, oh, I can do this property thing. Of course, I bought it. I was negative cash flowing on the property itself, but I cut my teeth. I had to find tenants. I had to sort out maintenance things. It really was a great property to start. And when I sold it, I made a bit of money, which confirmed that this whole property investment thing was a good thing to learn more about and get further into.
Miguel, on this show here, the phrase negative cash flow, we don't use that one.
I learned that myself.
We like to drive it home and say, I was making a loss.
I was making it. My day job was funding my weekend hobby.
Yeah. So that got your juices going now, Miguel, and there you are now. You started off with your first 2-bed, 1-bath, one inside, which is a great place, by the way. I mean, if you kept that property now, I think nothing less of $1 million on that unit, right?
1.8 million. That's what units are going for in that complex today.
Wow! Don't you kick yourself in the bum?
20 years later, but I think that's a key lesson, is that property always goes up. I think since then, I don't know my economic cycles, but since then we've had the 1998 crash, we've had the dot-com bug crash, we've had the 2008, 2000 financial crisis, we're going through another crisis, and since then, property has just increased. And it might, at any point in time, I might be doing better or worse than what you'd expect it to do, but property is constant. And I think and buying the right property at the right time, if you can ensure that property is cash flowing positive when you purchase it, then the value will sort itself out over the long term.
Agree with that. Miguel, when you started off, so there you are, were you working at the bank at that time already?
At the time, I just started working at the bank. Yeah, I was doing my articles as an accounting graduate.
Right.
I sold that property. I then went and purchased two more sectional title properties, one in Randburg and one near Cresta. And this is when I started getting, in my sense, a little bit more creative. And the property I purchased in Randburg was in Ferndale, and it was on the border of Bryanston.
Okay.
But when I paid Ferndale prices for the property, but I was achieving Sandton or Bryanston rents.
Nice.
And that's when I thought, sure, you've got to think clever about this. It's not just about buying property, it's about the location. It's about, I think very heavily when I'm looking at property, and I'm a buy-to-let investor. So I grow a portfolio. I don't flip and sell traditionally.
Yeah.
When I look at a property, I look at it in the sense of a tenant. How will I describe this property on a little advert on today on Gumtree or private property, and what photo will I take so that I'm ahead of other investors and their properties in the same publication?
I like that thinking. So you've got the end in mind already whilst you are looking for the right property.
Exactly. And a property really gets me excited when the apartments, because I deal with apartments and multi-lets, when the apartment has something different and unique. So whether that is space, it's a spacious apartment, which puts you ahead of your competitors. Whether it is a lot of storage space. So the one apartment I had in Cresta, the person I bought it from had put built-in cupboards everywhere, and they're totally overdone it above the doorways and all sorts. But that really worked for tenants who arrive, and they've usually got more clothing or more bits and pieces than those small apartments can cater for. So that set it aside. So I'd always look for something unique, or a view, or a large patio, or something that sets it aside. Because if you're looking for a 2-bedroom, 1-bathroom, you are 1 in 100. So what's going to set you aside? It can't just be price.
So Miguel, I am not fond of units in complexes for the reasons that and my discovery is that, number one, levies kind of like hit me hard, and that erodes my cash flow. That's the first thing. The second thing is that I do not have flexibility in terms of what I can do with my property. It is what it is. And I've got big brother who's the body corporate that I need to go and ask for every small little changes that I need to do. And for me, it's limiting. I don't feel comfortable there, but that's your happy place. In terms of these three, Miguel, how do you work around that? Or how do you make that work for your investment strategy?
So I sold them because of those exact reasons. So
okay.
I probably had them for about 3 or 4 years.
Yeah.
And at the time, I moved to London. Myself and my girlfriend then, my wife now, we were working in London. And I was really rethinking this whole property investment thing. And I saw exactly that as a sectional title, very limited on what you can do. You can buy at discount, but not sufficient, not enough discount. It's very difficult to make a sectional title cash flow positive. Very, very difficult.
Right.
And especially in a good area. For me, it's important I invest in good to great areas. Problem is, in good to great areas, your yields are much lower. It's very difficult to cash flow positive, and especially when it comes to sectional title. So being in London, we were there for 3 years. We took the opportunity to save as many pounds as we could, and we shared our house, and we did all those things. And whilst there, I sold by then I had 4 sectional title apartments. I sold all 4. That just was not part of the strategy. We weren't going to achieve what we wanted to with them. And we bought our first property, our first freehold, which we converted almost immediately. Whilst from London, my father converted them into 4 multi-lets. Whilst we're over. So my first renovation, my first conversion, I didn't even see with the renovation. Luckily, I did it from over the phone. There wasn't even Skype or Zoom at the time. There was just phone calls and faxes at the time. So, and I guess there was email, but there was phone calls and faxes in terms of drawings and all the rest. But it worked really well, and I still have that property today. Still have that property today.
You speak of your father helping you in this process here, being your contractor, so to speak. And earlier on when we were talking offline, you were saying that your father used to do that. Does he still do that? Is he still part of your strategy in terms of being a contractor, working alongside of you? Because what I've discovered, it's pretty difficult just finding a good contractor. And there you are, you've got a dad, someone whom you look up to because he's your father, number one. And then number two, he's doing the work for you. So definitely he's going to be doing it much better than anyone else. But how does that relationship or that dynamics work out?
So no, he's not. He helped me with the one project.
Okay.
And then he had his own job himself. So really, he was helping me on the side.
Nice.
So when we arrived back in 2005, we arrived back to a second project, and that project I managed that project. I became the contractor, and I pulled together the builder, electrician, plumbers, etc., painters, etc. And that's been my model ever since. I have a daytime job, but then my evening after 5:30, if I've got a project on the go, I'm arriving on site. I'm speaking to the guys, seeing what they've done for the day. I've got a builder and his team, electrician and his team. We've built up over time, and so I have that team around me, non-permanent, but I can pull on them for projects. And I have those teams, and my father's gone on to do other projects of his own, and we still talk about it and how's it going, and how we have different strategies in terms of where we invest, how we manage tenants, etc. So it's really great to have those mentors, those coaches early on, to give you the direction. And then what I find, as with anything else, as you grow your experience and your skill set and your knowledge, you potentially move on from that mentor. You've got to go find another mentor who's probably at the level where you want to be, and who can give you that direction. I think different people come into your life for different reasons at different times for that reason alone.
I agree with you there. But Miguel, I want to come back to your current strategy. What is it that you do? What's your go-to strategy? And if you are to find other things on the side that might support your strategy, what is it that you take, and what is it that you like? I ring fence only this, and anything else that comes through, I'm not going to touch.
Okay, so I have a normal 9-to-5 job. It's it's a job at Absa Bank. It's quite a demanding job.
Sure.
So when I say 9-to-5, I mean 9-to-5 got to be, or 8-to-5. I'm usually in the office, but there's work required beforehand and maybe afterwards, etc. So it's a normal, demanding corporate type job. So my property strategy needs to complement that. So I have a couple rules. All the properties that I invest in are within less than 10 minutes drive from my home. And that's because whilst I'm renovating initially, and of course, as I said, I manage multi-let. So every new project, every new investment requires a renovation of sorts, some light and some extensive. So I need to be able to go past the project on the way home. Sometimes even on the way to the office. So everything's within 10 minutes. Also, because I largely manage the properties myself, I have a property manager, which I can share with you in a minute. But I like to be able to, if something goes wrong, and it's 7 or 8 o'clock in the evening, I definitely don't want to be able. I definitely don't want to need to cross Johannesburg to go and deal with whatever the problem is. And especially when it comes to viewings, when there's a vacancy, if I'm having to cross Johannesburg to go and do a viewing, I'm probably going to miss a couple of viewings myself, and it's going to be much harder to let that property out. So I like to keep things close to home. Because of that, I do limit the area in which I invest in. I stay in Bryanston in Johannesburg, and it's a lovely place to stay. The problem in the area is that the properties are quite large, so investments are quite expensive. They take up a lot of cash as well initially with deposits and transfer fees, etc.
Yeah.
It's a great area. It's not great for yield or for cash flow, but it is great for property investment in terms of the property itself. So my strategy is one, it's a dual strategy. I don't get high yields or great rents, net rents, because of the high cost of investment, but I do get good quality properties. So I try to find properties that in the future could be a great option to sell to a developer. They on busy streets where there's a lot of traffic going past, so there might be a commercial upside in the future, etc. But first and foremost, they have to be a good buy-to-let structure. I need to be able to get the right consent, use, and zonings in place. And they need to cash flow positive to begin with, and I need to be able to get my cash out that I've invested in. So I definitely do have a report card that where all the different options need to be ticked before I put an OTP down and make an investment.
You speak of investing, particularly in Bryanston, which is generally an expensive area for kind of like people that stay in Johannesburg. But for me, the opportunities that I see there is that your appreciation in Bryanston is always going up. It's not like in some areas where it's flat or potentially going down. So that's a benefit there. If I look into the Bryanston areas, your tenant is a better quality tenant. You know, so it's someone that has a blue collar job, you know, that kind of a tenant. It's someone who potentially have a good job as well, you know.
Yeah.
And then the third thing that I can think of in those particular areas is that the structures are pretty solid.
Yes.
And as and when you start making changes, you're not having to have drastic changes that you need to do on your property because they're solid already. And
Yep.
if you get a good deal that's been managed very well, you know, you don't have to put in extensive monies, and you still have the liberty of the lifestyle of, you know, a comfortable neighborhood. People walk down the street with dogs and cats and hamsters and all of those things. So I like that area, but I think from an investment perspective, if done correctly, you can bank both cash flow and appreciation, which is a happy place, I think.
And that's it exactly. None of my properties have particularly strong yields.
Yeah.
But they do cash flow positive.
Right.
But they're all in good areas where I'm getting the benefit of the property price growth. So it's pretty balanced. Okay.
Yes.
It's pretty balanced. I also made the decision some time back that I was happy to stay in my corporate job for some time because it's interesting. I enjoy the environment, I enjoy the people, I enjoy the mental stimulation.
Yeah.
Going, you know, which you wouldn't always necessarily get in your own property business. So I was happy to play this dual approach. I think you also need to mention that when we lived in the UK, we managed to save up quite a bit of money and quite a bit of cash. And I think to get into, and because we looked at our incomes as two professionals, and myself, my wife, who's my partner, we looked at what we could finance. We looked at the cash we had saved up on the 3 years we were there, and we used the combination of that to kick off our property investment business. And I guess because we were investing in an area in Bryanston, you can get properties that go for 16 million for an acre, okay? But you can also get properties that go for today 3.5 million for an acre. Very different house on there, but your top side is very high. So, and that's something I've realized recently, where if you look for areas where there's a big gap between the average top side of so that 16 million maybe is on the extreme side, but it's really very easy to find many properties between the 8 and 10 million mark in Bryanston. Okay, but you'll find some properties at 3.5, 4 million mark.
Right.
In the good parts of Bryanston. Other parts of Bryanston you'll get an acre for less than 3 million. So it depends. The lesson here is that if you buy in the right area, you buy the worst property in the right area, and that area has a really high market value. By doing a few things to that property, you can get it refinanced for the higher value. You will always have equity. Always have equity in your property, right? With definitely not the same amount of investment. So that's really helped us invest, roll our money, get the money out, go into the next investment.
Nice.
But as with any property investment, you've got to think about how you get your cash out. Whether once you get your cash out, your property is still cash flow positive. Whether you mentioned getting tenants. Tenants in this area are better, are good. They're usually employed somewhere in a corporate or office space around Sandton. So the properties are their jobs are fairly stable. So we've got that sustainable rental income, etc. But it's very competitive. We've got lots of apartments, estates, etc. in the area. So we have to make sure the product that we're putting together is a great product that's going to compete well with the developers in the area.
Nice. Miguel, you speak of that your wife is your partner, your business partner, right? And I just want to touch on that one because For me, I struggled a little bit in the beginning in having my wife as a partner in the other businesses that we started off with. However, as time continued, the one thing that we resorted to was that we knew that our end goal was the same, but the journey to get there and the how, we were very different. In terms of even the risk appetite that we had, should say, no, let's not take that money in the credit card. I'm like, no, we have to. And so there was friction as we went on until we actually resorted to, hey, we know the end goal, you work for me and I report back to you on what I've done. And we continued that way, and of late now we've started working closely together again, because we have now kind of like smoothened that out in our relationship, even though we've been together for like 10 years. Having a wife as a business partner, it's a different dynamic, because you're still married. You still husband and wife. How have you navigated that?
Okay, so if I'm the CEO, she's the chairman.
Well said. On the other hand, your wife is an accountant as well, so that makes things.
Yeah, she's also finance. She's also finance, right? The chief financial officer.
Yes.
So it's and absolutely. So it's so we're not. When I say partners, the day-to-day managing of the business, etc., is very much up to me.
Sure.
They're looking for the next investment. I'm the active partner, if I can put it like that.
Right.
But absolutely rely on her to test my thinking, to rein in my enthusiasm.
Right.
And when I'm trying to make a property work with the numbers by tweaking this and tweaking there, she's my reality check.
Yep.
And sometimes it's can be very frustrating, and the frustration does come in. But I value the fact that what's been raised, again, we have the same end goal in mind, but the issues that she's raising are the issues that I'm sometimes trying to ignore to make a particular project work. Or sometimes the fact that she's very detail orientated, she'll point out things that are frustrating that I didn't see them in the first place. But valuable that she's pointing them out before they become a real issue. So I think it's about understanding what you bring to the partnership, what they bring to the partnership, and understanding how you complement each other. And I think just being comfortable with the fact that you're not always going to be of the same mind about anything. That you're going to frustrate and irritate each other, and be comfortable with that. But there's definitely a lot more good than bad, and the fact that you complement each other and that you don't overlap each other entirely actually makes you stronger. Yeah.
Miguel, you started off back in the days in the 90s. You stuck on with your job, and you're still at it, you're still investing, you've got your strategy now kind of like pinned down. You don't do, at some point, people like say flips are working, and you don't jump in and jump out. And you're quite strong in the head in terms of what is it that you're trying to achieve, right? And hence you have stayed. Bryanston is not a big area; it's a very small area, but that's the area that you are digging into in there because you stayed there. The thing that I want to speak about, Miguel, is that now that you've journeyed through, you've literally gone in, I think, 2 decades, right, of property investing.
Yeah.
What are some of the benefits, Miguel, that you are now seeing that manifested in your life, in your business? And when you were starting off, you were like thinking, maybe this is the goal. But now some of those things now are coming into life, whether it is from the business, from a financial perspective, or from a family perspective, in whatever form of goal that you have set up in terms of your benefits.
No, absolutely, and that's a great question, because I think we learn a lot from people who've been down the road, right?
Yeah.
And where they find themselves and all that. So maybe a couple of lessons learned.
Yeah.
And then that, right? So I've been in this game. I've been doing this now for 22 years.
Right.
And I started off with sectional title, moved away from sectional title, etc. Right. And I've probably done a property investment deal one every 3 years since I started. Maybe 2.5, 3 years on average, right?
Right.
Sure. That means that we would do a deal, we'd go through the whole renovation project, get the units rented out on the multi-lets, and then we'd take a step back for a year or two and go back to our very demanding corporate jobs and go back to our families and have kids and all those other things you do as you're growing up.
Yeah.
And then get back, and then 2 or 3 years later, get back in, do another deal, and then get back out. I wish I had done smaller deals, one a year for the last 20 years. That consistency, that having a clear, I had a strategy, but it wasn't clear in my mind. I never sat down with anyone, and there wasn't really anyone at the time like there's now, like yourself. They actually sit down and say, with a coach or a mentor, what is your strategy? What is your plan? What does that look like? How are we going to get there? Okay, now let's work the plan.
Mm-hmm.
So it's very much something that was done on the side. It was a hobby. I could tick the box to say I was dealing with my investment, with my financial future, by doing some property investments, but there wasn't that focus and attention and that consistency. And if there's anything I look back, even it had been consistency with sectional title for that matter, even if I just maintained property investments and rolled and grew that portfolio little by little, but consistently over the last 20 years, I would be in a very different situation right now. Having said that, I've got a strong portfolio.
Yeah.
I still have to work for a day job. I'm still not out of my day job. So it isn't a couple deals and all of a sudden you are financially free. Because I think as we grow, as we get married, have kids, and we grow our financial needs and also our aspirations, we go from wanting to drive that car to a bigger car, to going, our kids not going to one school, going to another school. Our needs grow, and that can be a whole different discussion in terms of your needs and wants, right? But as we grow and as we do that, therefore, our investment and strategy, our investment journey, and our strategies need to keep up with it, or need to keep chasing that. But today, I live in a house that I probably wouldn't be able to live in if I didn't have the income that I have coming from our properties. I don't drive a flashy car. Actually, next year my car is 10 years old. So we're fairly prudent in our expenses, but we have a few nice things that we enjoy. I've got a lovely house. We live in a lovely area. My kids are at a private school. That wouldn't be possible if it wasn't for the property income augmenting our corporate job income. I don't have a sports car. I don't have a house on the coast yet, etc. Right? So it's definitely not all those trimmings, right?
Yeah.
But it definitely has helped, even if I followed a very inconsistent strategy of investment strategy over the last 20 years. Having said that, I think I've now come to realize, I'm 45 this year, and I've come to realize that I need to focus. I need that lesson of consistency is a lesson that I've realized fairly recently. It's taken 20 years to hit me on the head. And now I've created an urgency. I want to do 2, if not 3, property investment deals a year. That's my target. COVID has kind of got in the way of that, but I'm determined to do at least 1, if not 2, this year. In my personal basis, I keep it simple. I've got a trusted PTY structure. It's just myself and my wife. We don't do too many partnerships, so we keep it fairly simple. But we've created that urgency, and I think, and I'm trying to catch up for maybe what I've missed out on over the last couple of years.
Nice. Miguel, the last question before we go on to the last section now of our conversation is that what is the one thing that you probably underestimated before you were in property, but now that you're in property, it is actually one of the key things that a person or you have discovered that you should be knowing?
Sure. I underestimated how much I can do by myself.
Okay.
Without having to have other people to help me. I think when you're trying to get into anything, you're always looking at what you can't do. You're always looking at those who've done it, and you say, because they've got R1 million, because they've got access to cash, because they've got the knowledge, because they've got the contacts, I can't do that. And you're probably right, because you're never going to do what other people do. You're going to do it in your own way. But that should never be a limitation. You maybe not be able, you can't do that now. But if you get on that road and you're very clear about where you want to go, there's no limit to what an individual can do for themselves with others and using different strategies and you're continually learning as an individual. I'm continually learning as an individual. And the things I thought I couldn't do 5 years ago, I'm doing today. I've done them already. I find that if you give yourself a 5-year target and you commit to it, it is every likelihood you'll get that 5-year target in year 3, because you don't realize how much you can do in whatever that is, whether it's financial investing, sports, fitness, whatever goal you have. You always underestimate how much you can do until you get doing it. The reality is the majority of us, and I put myself in that group, we stop before we start. We don't even try. And I think if you just give yourself a benefit of the doubt that you could actually get it done, the reality is you will most likely do more.
Nice. I like that, Miguel. I like that.
Yeah.
Miguel, I'm going to ask you the last 2 questions. And these questions here, you don't have to think. You just need to give it to me as they come.
Sure.
Besides the 2 questions, besides the last 2 books that you shared, do you have a favorite business book?
Do I have a favorite business book?
Yeah.
There is a book called The Richest Man in Babylon.
Right. I like that one too. My wife is actually going through that one.
And it's a story. And it's a story. Now I probably read that 10 or 15 years ago. And it's simple lessons, simple truths.
Yeah.
And anyone can apply that, whether it's in property or whether it's anything else.
Right.
Anyone can apply it. So really like that book.
Right. The last question, Miguel, is what does success look like for Miguel?
Sure. Success is the financial burdens lifted.
Yeah.
Living the life that I want to live. Doesn't need to be on yachts and fast cars.
Yeah.
But having options and choices about how I want to live my life. I think that's what success looks like.
Boom! Ladies and gentlemen, you had it right. There you go. And that was Miguel Mertens. And Miguel, we didn't speak about your day job. What do you do?
So I'm extremely fortunate that I'm able to, as of the last 5 years, able to complement my hobby and my passion around property with my job at Absa Home Loans. And I'm a product manager at Absa Home Loans, and my job really is to develop new products and new features with home loans to help investors grow their portfolios. So I'm fortunate that I speak to investors regularly. Every second or third day, I'm having a conversation with an investor. I'm solving a problem. We're thinking of new ideas, and so I'm very fortunate to have that role at this point in time.
That's what I call the unfair advantage, because in all of these conversations that you are having, you get to think with your employees head, employers head on how I can solve it. But in the same breath, it can also apply to you as an individual, as an investor, isn't it?
Very much so, very much so. And I continually get reminded at how we don't need to rely on somebody else to determine our financial future. I get amazed that when I meet people at events, people such as yourself who make a clear decision to take a different path and live a different life. And that doesn't mean it's easy. It's hard, it's difficult, and it has its challenges, and it definitely has its risks, especially once you have a family and you have those commitments. But I think when anybody puts their head down, is willing to commit to reaching an objective, puts passion and effort and their heart behind it, I think anything is achievable.
Nice.
I think far too often we look at the end picture and we see where someone's at, but we don't realize the effort and the grind and the work that goes in getting there.
Yeah. Miguel, it's been great having you around. Ladies and gentlemen, that was Miguel Mertens, and an investor in his own right, killing it in his own right. And I've been fascinated by talking about his investment journey so far. I didn't know that Miguel is rough and tough from Hillbrow, but yeah.
I still drive through there every day when I used to go into the office, just to keep the edge.
To reminisce on your childhood.
DJ, thanks so much for having me. It's been really nice to have this conversation with you. Really appreciate the time.
Nice. Miguel, thanks a lot. And ladies and gentlemen, that's the end of the show. And you can find us here all the time. And we look forward to seeing you again. Thanks, Miguel, and God bless. Cheers.
Thank you.
Onset when I was starting working, Miguel, that was my challenge. How do I get to that second or third income?
Right.
And I knew that property was the end goal. I just didn't know how.
Yeah.
And I only knew two ways: to borrow money or to have a business so that you can buy cash.
Yes.
Because one of my cousin's grandfather, he actually owned a small strip mall that he had bought back in the 80s and 90s. And all of that strip mall, together with the surrounding houses, they were owned outright cash, and the entire family lived on that. So I knew it was possible, but I just didn't know how do you get to do it. And when I discovered The Rich Dad, and I started reading about Robert Kiyosaki, I literally got immersed into it.
Yes.
And I was fortunate to find two podcasts in particular. The one it's a British one, and another one it's an American one. And I jumped into it. I think they were both on maybe about 400, 200 and 300. I listened to every guest, Miguel.
Really, but you know, TJ, I think that's the key, hey? There must be a burning desire. Either, can I tell you what my burning desire was?
Yeah.
Not to be poor. We had family, so I didn't have much family. My parents came here from Mozambique, and any family we had went back to Portugal, so I didn't have too much family. I've got no family on my side in South Africa. It's all on my wife's side.
Sure.
But we had a family friend. My parents had a family friend. We came over from Mozambique, and she was, I don't know what she did, but she was well off for a while. But then something happened, and she lost her leg. And she went overnight from like being well off, you know, dancing and being in society. I mean, this is what you see when you're 8 years old.
Yeah.
To being literally destitute and living off the charity of others and family sending her some money from overseas every so often. And I thought I never, ever want to be in that situation. And I realized how fickle life can be, I guess. And that still keeps me going today. So I want to make sure that I got financial security. I don't need the Ferrari.
Yeah.
I'm happy. I'm super happy with the Toyota, but I need to make sure that no one's going to take that Toyota away from me.
100%.
Yeah. And I guess, my story, a lot of people can't relate it, because I think a lot of the young people these days are coming from that time where things were easier. And they probably were, don't get me wrong. Although everything was my own cash. We overseas, we lived with four, we lived in a house with three other rooms, and we shared a room because we saved every single pound we could get. We didn't travel as much as we could have and all that. And we came back with as much money as we could, and that got us going, okay? So we had our own version of struggles, but the thing is, the lessons can be applied, I think, by most people in their own ways. One of the biggest lessons I've learned through SAPTEM is the job of sourcing. The fact that a person can go find a property, can get an OTP on the property and sell that for 20,000 Rand blows my mind. Okay, fine. But that has got to be the best, easiest job type to get into with the right knowledge. And I don't know why we haven't got hundreds of people just sourcing property, sourcing deals, packaging it for investors, and just getting paid what is relatively good cash.
Because it's not easy. Yeah.
You reckon, huh? Okay, and I'm saying I reckon because I've never done it, huh?
It is. I mean, I've done it, and I continuously do it for my business partners.
Yeah.
And I've got a deal now. About 3 weeks ago, I shared with my business partner that we've got this deal. I give them the numbers, and they've been anxious from 2 weekends ago, and they're asking me every second day, "And we'll close it. We'll close it. We'll close it." And I eventually said to them last night, it's not easy to just close it. There's lots of stuff that goes into it. I'm still messaging the individual. We have knocked them down now around about 300,000 in addition to what the original price that I gave you. So just be a little bit patient with me. It's in the bag, but it's not sealed yet,
Yeah.
So
yeah.
There's lots that goes into it behind the scene.
Yes.
Before the deal is ripe. In that process, that if you don't have it in a systemized manner, it can become a challenge.
Yes. No, fair enough. No, and I don't want to oversimplify it. Absolutely not. And I appreciate that. But I think anyone wanting to get into property these days, there's no excuse. There's no reason why anyone in their own way, whether they've got an income, which a bank will finance, whether they've got cash or whether they've got none of the above, but they've taken the time to learn how to do it.
Yeah.
And it's often the learnings are free. The learnings are free, for you to start getting into. The rest you can learn from experience. So I still think it's definitely an industry many people can get into.
But
TJ,
I should also state the fact that once you get into the swing of it, you are very much correct that it looks seamless and deal starts coming through to you and it becomes very easy. So yes, you're right. But at many times we start off and then the deals don't come and we start, it's not working, it's not for me. And that's where people, because I've seen it happen, a lot of guys come in, they go to Andrew's training, they come on fire. TJ, I've heard I want to do sourcing, I want to do it. They set up a website, and then 3 months, nothing. I knock on their door, do you have a deal? I'm also looking for a deal. Nothing.
Yeah.
You can actually hand pick guys that are active, that are doing it from a sourcing perspective.
True. Yeah, absolutely. Yeah.
Cool, Miguel.
Anything's possible if you want it, eh? Simple as that. Anything's possible if you really want it. Yeah.
It's been great.
TJ, thanks so much, eh? Yeah,
right.
and send my regards to Genevieve, right, eh?
Sure, I'll do so.
To your chairman, okay?
Yeah.
Cheers, eh?
Yes.
Bye-bye.
Bye. Bye.